In the world of trading, we're often told that victory belongs to the smartest, the most brilliant, the ones with the most complex algorithms. But that's a lie. Victory isn't claimed by the brilliant, it's claimed by the disciplined. And even for them, there's a silent killer, an enemy that stalks the most perfect traders, whispering from inside your own mind. It's called position justification, and it's the psychological trap that turns winners into cautionary tales. This isn't a story about Lambos or easy profits. This is a raw, honest look at the mental battlefield where fortunes are truly won and lost. So, if you're serious about not just making money, but keeping it, stay with me. Let's talk about Maya. By every metric, Maya was a perfect trader. Her strategy was a masterpiece of logic, her execution was precise, and her discipline was legendary among her peers. For years, she meticulously built her empire, one calculated trade at a time, creating a monument to cold, hard logic. She was the trader everyone wanted to be, but one day, a single position, a routine trade, turned against her. At first, it was a small loss, the kind of thing that happens every day in the market. But this time, something was different. Something inside her snapped. Instead of cutting it loose, her standard procedure, she held on. It's just a pullback, she told herself. That was the first lie. The market didn't listen. It dipped further. Her small loss started to grow, becoming uncomfortable. The fundamentals are still strong, she rationalized, clutching her initial analysis like a holy text. That was the second lie. She scrolled through forums, looking for any scrap of information that confirmed her bias, ignoring the roaring chorus of the market screaming that she was wrong. As her account started to bleed, as the red numbers grew larger and larger, the final, fatal lie took hold. I can't take a loss this big. It has to come back. It never did. The market, in its impersonal way, continued its descent. Maya, the perfect trader, the legend, was wiped out. Not by a market crash, not by a black swan event, but by a single decision, a single, catastrophic failure to accept reality. She wasn't beaten by the market. She was destroyed by her own justification. Maya's story is a tragedy, but it's not unique. It happens every single day. Traders, both new and experienced, fall into the same trap, telling themselves three core lies to justify a losing position. The first and most common lie is, it's just temporary volatility. They mistake a fundamental shift in the market's direction for simple, random noise. They see a crack in the dam and convince themselves it's just a small leak that will fix itself. They cling to the hope that the trend they were riding will magically reappear and save them. But hope is not a strategy. Mistaking a tidal wave for a ripple is a deadly error. The second lie is, my analysis is still valid. This is the ego-driven lie. Traders become married to their initial thesis. They've done the work, they've studied the charts, they've read the reports. They feel they must be right. So, they ignore the mounting evidence to the contrary. They filter out any information that contradicts their worldview. They forget the most important rule of the markets. The market is always right. Your analysis, no matter how brilliant, is not infallible. When the price action tells you your story is wrong, you must listen. Arguing with the tape is like arguing with the ocean. You will always lose. And the third lie, the most dangerous of all, is, I'm too deep in to sell now. This is the sunk cost fallacy in its most destructive form. The loss has grown so large that the pain of realizing it feels unbearable. So they hold on, letting a bad decision dictate their future ones. They double down, averaging down into a losing position, throwing good money after bad. They transform what could have been a manageable, educational loss into a catastrophic, account-ending one. They're no longer trading their plan. They're trading out of fear and desperation, praying for a miracle that rarely comes. Now, let me introduce you to another trader. His name is Marcus. Marcus is a survivor. He's been in the game for decades. He's seen traders like Maya come and go, brilliant flames that burned bright and then burned out just as fast. Here's the thing. Marcus isn't necessarily smarter than Maya was. His strategies aren't some secret magical formula. But he possesses one skill that she lacked, a skill more valuable than any indicator or algorithm. He has the brutal, unflinching ability to recognize justification the moment it whispers in his ear, and to cut it out like a cancer. When a trade goes against Marcus, he doesn't hear whispers of hope. He hears a blaring warning bell. He doesn't see a position tied to his ego. He sees a number on a screen. And if that number breaches his predefined risk limit, his stop loss, he acts. There is no hesitation. There is no emotion. There is no second guessing. He executes his exit. Click. Done. He takes the small, planned loss and moves on to the next opportunity. He survives and thrives because he kills his ego before it has a chance to kill his account. He understands that his job is not to be right. His job is to manage risk and stay in the game. So how do you stop being a Maya and start being a Marcus? How do you cultivate this survivor's mindset? It's not about willpower, it's about process. It's about building a system of rules that protect you from your own worst instincts. Here are 5 practical, non-negotiable protocols to build that system. First, define your exit before you even enter the trade. Your stop loss is not a suggestion. It's not a vague idea. It is the law. It is your contract with yourself. You must know, to the exact tick, the point where your trade idea is proven wrong. And when that point is hit, you get out. No exceptions. This single rule is the most powerful defense you have against position justification. Second, write down your trading plan. I mean physically, write it down or type it out. What are your entry criteria? What is your exit criteria? What is your position size? Having a physical plan that you can see and touch makes it real. It forces you to confront your rules in the heat of the moment and makes it much harder to break them on an emotional whim. Your written plan is your anchor in the storm of market emotions. Third, conduct a post-mortem on every single losing trade. This is crucial. After the dust has settled and the emotion has faded, go back and analyze the trade. But don't just ask what went wrong with the chart or the setup. Ask yourself, what went wrong with my thinking? Did I follow my plan? Did I hesitate? Did I let a small loss turn into a bigger one? Was I telling myself any of the 3 lies? This ruthless self-interrogation builds the self-awareness you need to spot justification early. Fourth, set a maximum daily loss limit. This is your circuit breaker. Decide on a percentage or dollar amount that, if lost in a single day, means you are done. You close your platform, you turn off the screen, and you walk away. Period. This prevents a single bad day, where you might be emotional or off your game, from spiraling into a week of revenge, trading, and blowing up your account. It contains the damage. And finally, number 5, practice acceptance. This is the mental side of the game. You must accept, deep in your bones, that you will be wrong. A lot. You must accept that you will have losses. It's a non-negotiable part of the business. The market does not know you exist. It does not care about your opinion, your analysis, or your feelings. It only rewards one thing over the long run: discipline. True acceptance means a loss is no longer an assault on your ego. It's just a business expense. Position justification is the siren song of the trading world. It's a sweet, tempting melody that promises a return to safety, a return to profitability, all while luring your ship onto the rocks of financial ruin. It whispers that you're right, that the market is wrong, that you just need to hold on a little longer. But it's dragging you deeper into the abyss with every tick. The only way to win is to refuse to listen to that song. You have to lash yourself to the mast of your trading plan. Be like Marcus. Be a survivor. Acknowledge the truth, kill the justification, and live to trade another day. Thanks for watching. If this message resonated with you, hit that subscribe button. Let's build a community of disciplined traders together. See you in the next one.